You know, when you think of the greatest investors in history, Warren Buffett's name is almost always at the top of the list. But what if I told you that his entire incredible philosophy, the secret to all those billions, really just boils down to one single powerful idea? Well, today, we're going to break down that exact thing, the most important factor he looks for in any business. So, what is it? What's that one thing he values above everything else? I mean, it's a question investors have been asking for decades, and the answer, well, it's surprisingly simple, but at the same time, incredibly profound. All right, the answer to that billion-dollar question? It's a simple but really powerful concept that Buffett famously calls a moat. Okay, so in the world of investing, a moat isn't just some catchy phrase. It has a formal name, a durable competitive advantage. And the key words you got to focus on here are durable and long-term. This isn't about having one good quarter. No, this is about having a structural defense that can last for years, maybe even decades. And honestly, the best way to picture this is with that classic image of a castle. Think of the castle as a company's profits. The moat is that deep, wide ditch all around it, protecting those profits from all the invading rivals who'd love to get a piece of the action. It's simple. The wider and deeper the moat, the safer the castle. So we get what a moat is. But why does it matter so much? Why is this one little idea so incredibly critical to a company's long-term survival and success? Let's dig in. Well, a strong moat gives a company three absolutely crucial benefits, and they are sustainable profitability, pricing power, and predictability. First up, you've got sustainable profitability. This basically means the company can consistently keep competitors at bay. You know, all those rivals who are trying to copy their success and drive their prices down. A good moat makes that nearly impossible. Then there's pricing power. This is huge. It's a company's ability to actually raise its prices without scaring away all its customers. It's an incredible defense against things like inflation. And finally, all of this creates predictability. When a company is this stable, it makes it a much more reliable and, frankly, safer long-term investment. These three things working together, that's what makes a moat so incredibly valuable. Right, so it's clear these moats are a huge deal. But here's the thing, they're not all built the same way. They really come in four main forms, and understanding these blueprints, well, that's the key to spotting a truly great business. First on our list, intangible assets. Now, this is the stuff you can't really touch. Think about patents that protect an invention, or just a really strong, trusted brand name. The reason they're so powerful is because they are incredibly difficult, if not impossible, for a competitor to just copy. The absolute classic example here has to be Coca-Cola. It's so much more than just a fizzy drink, right? It's a global brand that's been built up for over 100 years. That name recognition, that trust, it's an intangible asset so powerful that really no competitor has ever even come close. Okay, the second type of moat is what we call switching costs. This is all about making your product or your service sticky. It's when it becomes such a massive pain for a customer to leave and go to a competitor that they just don't bother. A perfect real-world example is any kind of complex software used at work. I mean, think about it. Once a company has spent months and a ton of money training its entire staff on a system, the cost, the time, the sheer headache of switching to something new it's immense. That creates a very, very powerful moat. Third, we have network effects. This one is really fascinating. It creates this kind of virtuous cycle where the bigger a service gets, the more valuable it becomes for every single user, which in turn makes it even bigger. It's a moat that literally builds itself. I mean, just look at any social media platform. Its value doesn't come from the technology, really. It comes from the fact that all your friends are there. If everyone you know is on one platform, there's basically zero reason for you to go join some new empty one. The network is the moat. And finally, our fourth type of moat is the cost advantage. This one is pretty straightforward but incredibly effective. It's when a company can simply make something or sell something cheaper than anyone else, usually because they have massive scale or some super efficient process. Walmart is the textbook case for this. Their enormous size gives them unbelievable bargaining power with their suppliers. They can get lower prices than pretty much anyone else, and they can pass those savings on to us, the customers. That makes it almost impossible for smaller stores to compete on price. So we've walked through what a moat is, why it's so important, and the four main types you'll see out there. Now let's bring it all home and figure out what the big takeaway really is. So let's do a super quick recap just to lock this in. At its core, a moat is just a durable competitive advantage. Its real power comes from giving a company that magical trio of profitability, pricing power, and predictability. And you can spot one by looking for those 4 blueprints: intangibles, switching costs, network effects, or a powerful cost advantage. And this, right here, is the most important part. The whole point of looking for a moat is that it forces you to think about the long term. It's not about finding a company that's having a great year right now. It's about finding a company with a structural advantage so powerful that it's almost guaranteed to still be on top 10, maybe even 20 years from now. And that leaves you with one final question to chew on. Because once you get this framework, you'll start seeing these moats everywhere. So think about it. What moats are protecting the phone in your hand, or the coffee you drink every morning, or the software you use at work? The answer might just change the way you see the entire world of business forever.